And staying on with business stories from China, China's stock market was subjected to an intervention, including infusions of cash from the government's banking system and further restrictions on short sellers. Still, Chinese equities cannot seem to break free of the real estate sector's downward cycle of despair. Property investment in China, a major factor in the country's economic growth, has continued to decline. The home values in the country's largest cities have fallen at the fastest rate in over a year in September. That has further dampened investors' enthusiasm about the third quarter economic growth numbers. Well, on its final trading day of the year, the benchmark CSI 300 index plunged more than 4%, wiping out all of its gains from the dramatic reopening surge that began at the end of last year. The drop came despite a plethora of market-supportive rules, such as stricter limits on short selling, while the foreigners sold 24 billion yuan, which is around $3.3 billion worth of onshore equities on a net basis this week, as geopolitical worries in West Asia weakened global stock markets. That is the biggest decline since the week ending on August 18th. Stocks of Chinese property developers reached a new low last week, falling to their lowest level since 2009, as government efforts to stimulate the housing sector failed to win over the investors. Home buyers are still extremely wary, and several major developers are still having cash flow problems, including Country Garden Holdings. To restore investor faith in China's $9.1 trillion stock market, they are now mulling establishing a state-backed stabilization fund. The CSI 300 index briefly pared losses following the news but finished Friday in the red. The index is down about 10% this year, marking a historic third consecutive year of declines.